Hey guys, Shane here from Awake FX. I want to welcome you to this trading video. Now in this one, I wanted to discuss stop loss placement. Now I know when you're in a trade, some people put their stop loss at a certain distance away from where they enter. But one thing that's very important is to put your stop loss in a location where the trade is invalidated. What does that mean? So you want to put your stop loss in a location where that if your stop loss is hit, you are technically wrong in the trade. And it's usually around an area where there is a market structure break. Okay, so I'm going to show you a live trade I'm actually currently in. And I took this trade with my mentorship team this morning live. So let's see how this trade plays out. And I'm going to discuss with you where I put the stop loss and why I put that there. So without further ado, let's have a look at the charts. Okay guys, so what we're looking at here is an ES chart, the E-mini S&P 500. And this is a 15-minute chart that we're looking at here right at the moment. Now I'm currently short and I have a 2.5 point stop here on this. And I'm targeting 5 points as a target. Okay, so we're looking to risk 1 hour to make 2 hour on this trade. I'm currently short and this is a live trade. I'm in this right now. Looking at this trade here, why did I take this trade? Okay, I'm just going to give you a brief overview. Now, I did share this with my members in the community live, where we're doing this live in a live stream. But price had been making this move higher here, in a series of higher highs and higher lows all the way up. Price broke this buy side level here and made this highest high. Then we had a market structure shift. What is a market structure shift? It's when our uptrend then breaks to a downtrend and we have a new lower high, lower low, lower high, and so on. Okay, so I'm expecting price to move lower down towards this sell side level down below. Now zooming in here a bit closer, I'm still live in the trade. This trade may not work out, right? But we'll see. We'll see if it does anyway. We'll let this play. And just to prove it is a live trade and a live chart, here's the time. It's Thursday, 11th July, 2024, 10:01 a.m. You can see that corresponds with this chart. The times I have on the chart here are New York time, so shown as 5 a.m. New York time down the bottom, UTC -4. So we're in profit now, but I did enter the trade here. I was in a bit of drawdown, but I was confident in holding the trade. Why? Because I knew the location at which this trade was invalidated. So let's talk about that in a bit more detail. So we'll zoom in here a little bit. What you can see here is when price made this move from this swing high to this swing low, we had to move up to this lower high, lower low, okay? So in order for me to get into the trade, I entered right here, but price went against me, okay? And it went higher and higher and higher, and that's okay. At what point is this trade invalidated? Well, look at this swing high here. If I mark a little blue line there where that swing high is, so this line up here is the point at which the trade is invalidated if price trades above that, okay? Why? Because we moved from high to low, lower high, lower low. But if we move up here from this low and we make a higher high than this previous high, then things can change and we can be in an uptrend. So if I am short from this location here and price moves against me, I'm comfortable staying in the trade because price can retrace as much as it wants here. But it's once it kind of breaks this high and goes above that, that I would be wrong. Okay, I would be wrong. Price is allowed to pull back as much as it wants on a retracement. Now, usually we might get a 50% retracement, 60%, 70%, move lower. Here we nearly got 100% retracement. It literally touched these previous highs, okay? But a touch of them previous highs to me does not invalidate the potential for this to continue lower. It's only when it kind of breaks above here that is the case. And I'd never have my stop loss 1 tick above, at least 2 price increments above that location, because price can still spike up here, take a liquidity sweep and then move lower. So my point at which I am wrong and this trade, I would want to be out of this short trade would be if we break the high level up here, right there. So price is moving down nicely here. Let's see, can we get this to come into target? The next question is, well, Shane, what about stop loss? Do you move your stop loss when you're in a trade? Well, right now, I have no reason to move this stop loss. Okay, price is moving lower. That is great. But I would at least want to see price break these lows here before I consider doing anything with my stop loss. So for example, if price breaks this low here, like this, can I move my stop loss to break even? For me, the answer is no. Why not? Because price can break a previous low, have a pullback, which is completely normal, before moving lower. But this pullback is allowed to pull back as deeply as it wants. It can pull back all the way up here and still be a lower high than this previous high, which is why you can't move your stop loss to break even. And that's why a lot of people get stopped out early. They move their stop loss to break even without considering retracements that can happen before price continues in their direction. So I would like to see, if price breaks this previous low, pull back higher and potentially roll over lower. And then if it takes out this low here, at that point, I'd be happy enough then to bring my stop loss down to a break-even location. Okay, and then hold on for targets. So that's a little trick here I just wanted to show you guys today. At what point is a trade invalidated? The trend has to break, in my opinion. At what point should you move your stop loss? You need to wait for previous lows to break. If the previous lows are broken on this point here, I would consider moving my stop down half a tick above these highs. But I'd need to see this other pullback, because it's allowed pullback as deeply as it wants, because it can still remain in a downtrend even if it pulled all the way back up here. It can still be classified as a downtrend. Why? Because we moved from high, low, lower high, lower low. Equal high is not a break. Equal high, lower low. So price is allowed to pull back as deeply as it wants here. So you cannot move your stop loss until you get a new break lower like here. Then you can consider moving your stop loss down to break even. So right now my stop loss is 2.5 points and I'm waiting for price to do what it's going to do. So let's see how this trade plays out here, guys. As you can see, guys, now we're breaking this low. Okay, so because we're breaking this low, I'm comfortable with moving my stop loss. But where do I move my stop loss to? Well, look at this trend, how it's moved down. We move from high, low, lower high, lower low. This is the next equal or lower high, but we've made a lower low. So I'm comfortable with moving my stop above this high. So I can only move my stop down about 1/4 point there, one increment. Why? Because although we've broken this previous low, it doesn't mean price is just going to run to my target. It would be beautiful if it did, ladies and gentlemen, but it doesn't always mean that. Price can pull back up here before continuing lower. So I'm only interested in moving my stop loss down above these highs here of this trend. It looks good. Yeah, we've broken this previous low, so I'm pretty happy, but I'm not moving my stop to break even because price can retrace up to break even or even higher and still be technically in this downtrend. So I'll move my stop loss right now and let's see where this goes. Now, guys, see how this is retracing? So we were after breaking this low here and we're retracing higher. Okay, so that's completely normal as part of a downtrend. It has to go higher before it can go lower. It has to have a new lower high. So let's see the 5-minute chart here, for example. Here's the 5-minute chart. Where could price retrace to? It could retrace up to our entry point. Absolutely. That's why our stop is above the high. So price is allowed in this trend come back as much as it wants here and still technically be within a downtrend. This is where a lot of traders get stuck and get caught. They start getting into a profitable trade, they move their stop loss down too quick, it retraces into their stop loss. They either get a break even or potential loss in the trade, and then price continues on moving in their direction. Then they're banging their fist on the table going, why did I do that? Because you just are not patient. You have to look at the market structure. Okay, guys, so see how we retraced here? We moved up higher. Okay, we moved up to about this high here. We haven't yet broken this low. So once we start breaking this previous low over here, I'll then consider moving my stop loss perhaps around this area here, around break even. Once we break this low. So let's see what happens, ladies and gentlemen. So as you can see, price has moved lower, breaking this low here. So I'll just pull this across there. Price is moving down towards target. So this video initially, not really about the entry technique. It's more about stop loss management. When you're in a trade and price is moving here, it's coming down towards my target. My target exit point is actually just above here in that location. So I'm looking to exit the trade just here. And from a stop loss point of view, because we've kind of broken this low, we've had this pullback in trend. I don't expect a pullback to go up here really again. Okay, possibly in this area here, possibly snap this out, but I'm happy enough to pull my stop loss here down to break even at this point. So I'm going to bring my stop loss down to break even. So this would come down, 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 all the way down to break even point, which would be, I'll just mark it on the chart right here. So let's see, can price continue towards target? There may be another pullback here. You know, I'm prepared for a potential pullback here, but I'll look for price to get down towards my target, which is here. So on this trade now, my stop is at break even at 5683.5 here, above this previous high and at break even. So I'm happy for that trade to run down towards target just here. Exit at 79.5. Here's my trading platform on the left. So these are the kind of trades that I do live with my students in the live streams. And we do have the Market Mastery program where I teach you exactly how to trade step by step like this. So if you are interested in that, check out the link in the description of this video. So as you can see, price has broken this previous low here. So I do expect that price could, you know, always pull back up anywhere in this area here before moving lower again. So that's why I'm happy now to move my stop loss above this high down to break even. So if price does come back up here, you know, I wouldn't expect it really to break that high. All right, so I'm looking for price to hit my target down here below. If it just goes straight down, fantastic. But I do have prepared in the back of my mind that we could have a retracement higher anywhere in this area here. And I'm happy for that to take place. Stop is at break even. So this trade really, it's not more about the entry, it's more about stop loss management when you're in a trade. Okay, so now it's risk free. I can't lose money. I can only gain from this trade. Coming down. So this is futures trading. You know, if you have an interest in futures trading, which is different than CFD trading, is trading the real markets using contracts, futures contracts, not lots as you would use in a Forex market. So this is the kind of trading we do here at AwakeFX. Now I'm just going to switch to a 15-minute chart for a moment here. Here's our 15-minute chart. Now we do have a red high impact news event taking place at 8:30 a.m. New York time, which is this red vertical line here to the right. So I want to be out of the trade before then regardless. So price may not get down to my target. I may need to manually close, but I definitely need to be out of the trade before 8:30 a.m. New York. So these are the other little obstacles, little things you need to know about when you're trading. What I'm going to do here is going to mark in a 15-minute fair value gap I see right here. So that's a 15-minute fair value gap. So let's see how price behaves around this. So price still technically on its journey here. Is this the new swing high? Can we get a little break of this low? I've had a nice little rejection of that fair value gap there. I'm a day trader, guys, and I've been in this trade between 3.5 and 4 hours. So not all trades are in, out in seconds when you day trade the financial markets. I'm in this trade, you know, close to 4 hours. I let the trade run. Now, normally I'm away from my desk. I come back and check and see where it's at. But I'm just making this video for you guys here just to show you how to do the trade management. Stops at break even, risk-free trade. We're very close to target here. I do want to be out of the trade before this high impact news event. This fair value gap, very beautifully holding down price here, as we can see, keeping it nice and simple. And of course, yes, my magnet does help to pull price down. That magnetic force. You know, put your magnet on the chart and watch amazing things happen. Now we're just technically about to break this previous low now, so that will be quite significant. If we just get a little bit of a one tick push here. So we're just one tick away from filling this trade now. Let's see, can our magnet just pull price down? One more tick. It's actually touched my exit point there multiple times. Hasn't quite filled me to exit the trade. Can we do it now? Just trading at my price now. Can we get this order filled? Go on.
Order filled.
Order filled. Finally. Patience pays. So there's $1,000 in that one there. So that's a nice clean trade. So I was happy to get out there because in the end of the day, there is news coming out at 8:30 a.m. New York time, and it's 8:05. So just as a little recap here, guys, we got into the trade. I was showing you the trade management here. I initially had my stop up here above this high here. We were in this move lower. We made a swing high, swing low, lower high, lower low. And what I was talking about, I entered the trade here. However, it did move against me, which is completely fine. But this video is about where to put your stop loss. You need to put your stop loss in a place where the trade is invalidated. So if it was to break above these highs, it would have been a market structure shift, but that did not happen. We hit a lower low, we hit a lower high, we had a lower low, we had a lower high, and we hit our target. And we are done for the day. So thanks very much for watching. If you do enjoy trading videos like this, make sure to subscribe to the channel. I release videos like this all the time. There's lots of content here in ICT concepts, live trades, and other things to help you there with your trading. So thanks for watching. Take care and bye for now.